And everybody, it's Tim Reazor, the Chief Investment Strategist here at Revere Asset Management, just after 3 o'clock on a Friday night. Well, I guess a Friday afternoon. So, stock numbers, market levers. Before we begin, listen, just finished getting this posted for you. So, it's the fresh video podcast. And this video that you and I are enjoying together right now will be a little bit shorter because there is so much in here from things that we added, things Don's done in the portfolios, where we overall see markets potentially heading. It's a great story in here that Danny tells from a stock nerd and market lover that watches our videos. And she can't, you know what, I'll let Danny tell you the story, but the story is well worth your time. So anyway, just a ton in the video podcast. And I wanted to direct, if there's something not in this video for you, go to the video podcast and watch it. Most likely it's there. And if it's not, if you have any questions about other positions or anything that you're seeing in the market, just you can email me, tim@revereasset.com. If you have any questions for the portfolio extraordinaire himself, and then America's fiduciary right here, 855-732-5932. But if you want to reach out to me a little bit more quickly, email fills up, my friends. Email totally fills up. So what I want you to do is follow me on Twitter and then send your questions to me via direct message. You just have to let me know that you followed me so I can follow you back so we can communicate together. This is the easiest way for you and I to quote unquote text message. I stopped giving my phone number out a long time ago because it became a lot. And so Twitter is the way to absolutely positively contact me. And then look, if your question is detailed, don't be afraid to call us. We're never going to spam you. You're not going to be on some marketing list. We don't do any of that nonsense. Just call us at 855-732-5932. And then stock nerds, market lovers. These videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, if you need advice, if you seek advice, all you have to do is, in fact, give us a call. So let's see here as I write a note down. Let's go over, let's do some risk metrics here too before we do the volatility futures. So put call ratio, it actually went up today, and this is still neutral. And this, my friend, is still bearish. People are still loaded up on calls. Better that it's higher today, but I wouldn't call this what you and I have been talking about, getting up here with that 10-day moving average to like 0.9 and having a higher ratio. But for this market, you never know. Maybe that's all it needs. We'll see next week as you got Apple earnings, Amazon earnings, Facebook earnings, Google earnings, all the big heavy hitters come next week. VIX gets rejected. VIX is we talk a lot about VIX today. If you like VIX products, we talk a lot about VIX in the podcast. This is super interesting to me, and this remains bullish. This is a weekly chart of the SPX. So and what you just have here is this oscillation, and so you're still in a really super duper bullish weekly flat base. And so when I'm looking here at the volatility futures, they never inverted. And so like when people say sell off, and I'm quite sure there'll be a markets in turmoil. I'm joking. Look, 28.56 is still pricing below 30.27, still pricing below 32. So the timing mechanism combined with the charts, it's every one piece of information in a vacuum, combined with the put call ratio, it's just not all clear. I mean, this market can always sell off. It's a little bit complacent, right? But I wonder if the market got its attention, because you had the S&Ps. Now, they did not test back all the way to 21, but was this enough for government work? Was this close enough? Because what you have here now, though, is the leading index that actually finishes on the S&P futures at 3474. So where is that? That is below the 21. Now it's just a little bit below the 21. Huge support all the way down here at the 34. This is a victory for the NASDAQ. I mean, even though it's below the 21 and it can still drift lower, this is a victory here from down like 2.3% to 0.71. My friends, that's a victory. Doesn't mean it's out of the woods, but that's a victory. If you look at the YMs, now we have a small position in a Dow ETF. This down here, this is fine. And so if you look at the RTY, which we bought a position in yesterday, coming back to check the 200, it's got to hold this level for us to want to stay in it's got to hold. This is the IW on the ETF, not just the futures. it's got to hold this 200-day level right here for me to want to stay in it. And I believe that's Don's position as well. And so, but that's a victory. Everything finishing off the lows, my friends, is a victory. But look, eyes wide open. This market could absolutely positively fall apart. And what you want to do is just, don't rationalize anything. Just absolutely accept what's going on and take action if you need to. Let's do this. I want to talk about a couple positions here that I have. And then I want to update you on that Tesla trade. So a couple things with Tesla, but I'll update you on the Tesla options trade that I did in my personal account. And I will show you that ended up being a huge loser for me, but I'll show you what happened with it here at the end of this video. So let's do this. I'm going to show you Shop. I own Shop in the Shop. And let me get this on a Shop is kind of at my limit. I held on to it. Let's see if I can get the run into earnings next week. So today's the second close below the 21. It's really at my risk parameter right here. And if I look at, say, the ATR, yeah, you came down to the -1 ATR and you're off the lows here. But it kind of needs to hold here. Like it's one big formation if you look at it. This is where the rubber meets the road. And if I have to sell it before earnings, I'll sell it before earnings. But Shop reports towards the end of next week. Shop does. And then I've got Roku. I added Roku. And I really like what Roku was green on a tough day, and I like that a lot. So when I'm looking here at the chart of the Roku reports in August. So it's got a little bit of time, but still above the 21, and you're holding the upper third of this huge move from 7.9. So I like what Roku's doing here. And those are two of the newest positions. And then I like to follow up with you on things that when you sell them. We sold Skyworks yesterday before the close, took a small, little over 1% gain in this, and then you can see what it did today. So look, if they don't meet your rules, and I talk about earnings rules in the podcast, I can't say enough about going to the live video podcast and the earnings rules, VIX, information that I know you can use in there. Just a ton of knowledge in this week's podcast. Now let's do this. I am bullish for next week, SPX. So here's the S&P 500. I would be surprised if you don't come back up and challenge. If the S&Ps are strong here and you don't have the VIX inversion, was this enough to get everybody short? And so I'm not super duper bearish here, but look, that can change. If the S&Ps drop below the 21, NASDAQ, you're probably coming down to the 50. I'm going to start getting a little bit more protective than what I am right now. I still have didn't sell gold. And here's what I want to point out to you, where you are in time and space. You're really extended here. So if you want to, gold can always go higher, but you're now beyond the third ATR. GDX is consolidating at that third ATR, and that's kind of what we're talking about. It's great to consolidate up there, but you want to see a little bit more consolidation, and you want to start working those lower time frame charts, trying to find, if you're not participating, trying to find those entry areas. Is a 195-minute chart, and so you've got a nice flat base kind of developing within the smaller time frames, but everything always reverts back to the mean. So if I go to a daily chart of GDX and I put it on just a normal chart, the mean is all the way back here at the 21. And am I saying that's going to happen? No, the 21 can absolutely come up here to meet it. And here you can see the consolidation forming. But and you can see this move that GDX had. But the last time GDX came down to the 21, it was at the end of June. And so now this is about waiting for your pitch. And so can the rising 21 come up to meet price? Absolutely it can. And so patience, I'm telling you, the hardest thing in this game is absolute patience. So now I'm going to break here and talk about Tesla. So let's bring up a chart of Tesla. So I did a couple things with Tesla. We didn't own Tesla in the shop till this morning. So I bought Tesla, Danny and I bought Tesla for the stock and ETF portfolios off of this move to the 21. I'm not sure where Tesla goes from here, but these are my rules. And stocks in the top, top 10% fundamentally and technically, I want to buy them on pullbacks to the 21. Well, there's a pullback to the 21. Now, is Tesla going to just trade sideways here, catch its breath, and then do one of these, or is it going to do one of these? Well, I'll tell you what, if it starts closing below the 21, I'm going to sell it, and I'm not going to have to worry about it. So one or two closes typically is a shift in trend, but I've got to really, I think I'm at my entry here, like 14, 15, 14, 17. So I'm at my entry. So, but I got to tell you, if you start doing, for some reason, if you were to start getting too close below 21, 1271 is your next stop, and then you're looking at 1097. And so, do I think that's going to happen? I don't know. I don't want to pretend that I know. I just want to play the charts in front of me, and that's what I did here. But yesterday, I told you that I sold and I'll get that out of here. Every time that message pops up, I back up every night. Here we go. No, what did I do here? Yes. Okay. So I sold last night a 1500. I was looking for a 1500 pinning play. So 1500, 1550 on the top side, 1550 on the top side, and then 1500. So iron fly, 1500, 1450 on the downside. Now, I thought this was going to work out this morning when I saw this action in Tesla. So opens up super duper low, works its way all the way back into the it's like 1476. I'm like, oh, I'll be able to scratch this maybe if it comes up and holds here for a loss. And I ended up, when this happened, this move here, I'm like, you know what, I am selling this. And so where is that? So this actually ended up being a loss for me. And look, this is one contract, and I want to bring up losses for you. So this was, you don't get any of this information. I had to screenshot this at the end of the day, just the way Thinkorswim works. Look, this was on one contract. I want to point out the risks and options as well. I point out a whole bunch of risk in everything else that we do here. This isn't my personal account. This is completely acceptable for me. Do I want to take that much of a loss? Percentage-wise, it's super duper small. So it's really, I don't want to say it's no big deal. I mean, I don't want a loss, but it was within the realm of what I was willing to risk. But if you start pricing out options and you keep iron flies too short in terms of the wings, or you start getting greedy with what you'll end up destroying your account, is what I'm really trying to say. And so if you are new to options, for our clients, we're going to start doing a little more education on this in some private meetings for all of our clients. But if you're new to this and none of this makes sense, and you get a lot of questions, just email me or call 855-732-5932. More than happy to tell you. Look, there's a bunch of resources that you can always go to the internet and find your information. But what you have to do is that no matter what you do, you have to contain your risk, okay? And so you always have to know what your risk is. It is so much easier to buy and sell shares. So if you're newer to options, understand what your loss is. And look, nobody shows you loss. This is my personal account. So we didn't own Tesla when I was making these trades. Now we own Tesla. So I can still trade Tesla, just trade bullishly. But this was more of looking for a pinning play at 1500 that clearly didn't work out. And this is such a small portion of my portfolio. This is what I was willing to lose. And I forget what credit I took in here, but I took what did I take in the $2,500, 23, it's like 24, maybe $25 credit. I think it was that, and I had like a $400 cushion coming into the day. And then you can see what happened with Tesla closing out at 1417. The break even was around 1476. I'm doing this from memory. So I thought I had a break even when it was doing this. I'm like, oh, this is fantastic. And then before you know it, Bobby's uncle, it sells off. And I'm like, let me get out of this and just salvage whatever I can. And then we'll just let it go and try again next week. But you have to acknowledge your risk, okay? And so if you're newer to this, look, if you paper trade them, people tell you paper trade them, it's fine to do, but just know you get perfect fills and it's a perfect world, it's a sterile environment. when you're in the trades, oh, I always tell people, give yourself the gift of time. Give yourself the gift of time. And then always, 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 I can't stress enough, I say always, trade small and trade within your means. That is the lesson I'm trying to give you right here, okay? So I wanted to show you how this turned out. And so that might be, now for your account, that might not be an acceptable loss. For me, it was fine. So anyway, hopefully that all makes sense. And so let's see. I've got Roku, talked about Shop, talked about Tesla, talked about gold and silver. I think that's it. I think we're going to leave it there. And then, oh, Amazon earnings next week. And so look, we held Netflix, Amazon reports. I knew I was missing something. Amazon reports next week. This is, I mean, it closed down here above the, excuse me, above the 21. So all the 21 closed above the 21. I think you're going to get a movement. You're going to get some movement into Amazon. That's on Thursday. So after the close on Thursday is when Amazon reports. So we'll keep tracking that and we'll see how it goes. But I like our business. I've owned Amazon since middle to end of March. And so where is that entry at? So I don't anticipate myself selling. I mean, something drastic would have to happen for me to want to sell Amazon, but I got Amazon from in this area right in here. So back in the 1950s. So maybe 1960. I'll have to go back and look, but it's somewhere towards the end of March as it was coming through. And so, and then we still own Netflix, and then Netflix might need a trip to the 50-day here. So I'm okay with this chart. And if you just want ATR below, and I bet you Netflix is now. I had a question about this on Twitter the other night. Netflix, I believe, is just range bound, probably between like 14, maybe 1460 and 500. And so, well, let's get there. We go. So there's 1460 right at the 50-day, and then there's 500 right above the 8. So it's probably just range bound for a while. And so until the next catalyst can come up. So hopefully that all helps. Please, 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 so much more information right here in the video podcast. And with that, I hope it all helps, and I will see you at the next update.